Hello, Warriors. Dale Pinkert here at TradeGATEHub.com. Let's have a great week. Just want to update us on, the call from last week for a top in the dollar was based upon this high being confirmed by the RSI. You see these readings over 80 at 80. So last week I said I'm looking for one more high because it looked like we had a little double top at 94.5 with this wick on shorter term charts like the 1 hour, 2 hour, and we took it out and we did diverge, and that was the call. I was on the air with you guys. We were trading about 94.30. I said, this is the top for a reaction. I'm not a big dollar bear looking for a crash. In fact, we haven't even gotten to the 93.5 breakout, so that's going to be an important area. But to me, it still looks like there's some more downside during this cycle before we turn back up. And, I think we will get a test of this breakout, maybe even the moving average at 93.39. The only difference is this time we're getting a little bit of a turn. Euro outperforming cable. Here's Euro today. See some blue candles, and the cable's down 17 with Euro up 8. And, we've been having a lot of pressure in Euro pound. We actually made lower lows, finally took out all the stops in Euro pound. I moved myself out of the way. You'll see right here, we had this low back in April of 21, and then August of 21, and now here in October. And, it could end up being some type of 3 drive formation here. You look at the weekly, and we're still above these lows, and I know some people are looking for these lows to be taken out. I'm a little more skeptical because everyone is pretty bearish here, and I think there's a possibility on the next rally in the dollar that the euro's almost there. My long-term buys in euro are going to come in down here around the 113 level, but perhaps the pound will have further to fall once it peaks up here. Maybe we could see 126. So euro pound could perform. So to me now, as well as the dollar looking to work lower, I could make a case pretty easily for this 117 level up here on the 2 hour. 4 hour, 117. Okay, as you can see, we're holding this moving average on this pullback. This was the weakness, but again, pointed out last week, euro diverged at new lows while cable didn't get close to new lows. But the euro, I think, is going to assume leadership for a little while. And this 117.50 is my bull bear line. It's the headline of this video, and that's because you could go way back and see how many times that 117.50 has come into play. So for me, in order to really declare that there's going to be something more long lasting in the euro and weakness in the dollar, it's going to take losses over 17.50 for us to rally back to 17 or so, or even 17.50 and fail, is likely. Previous lows here at 116.65. But you could see we're diverging down here, and we're getting a nice action in that candle. You could really see it in the daily compared to a red candle in cable, right? So therefore, euro pound due for at least some type of bear market rally, maybe back to 85.50, which happens to be the 2-week off number. We close over 85.50 in euro pound. I think you have something going, and could be fairly long-term in nature. It doesn't matter if the dollar's going up or down. It's about the euro outperforming cable, which during this whole period, cable has been outperforming euro, and looking for a reversal of that trend. Taking a look at the yen, I still see no reason to short it. As on the daily, we're confirming still no divergence, just a little bit here. But I've seen some counts that could take us above 116. I wouldn't be surprised to see a pullback before that happens. We could get a pullback before we march 116, maybe back towards 113 or so. But I'm looking for 116. Part of that is this. There's your 10-year yield, and as you can see, you have one drive here, right? You have one drive here, and I think we could trade 168 or so in probably this week, and that's going to be an important level, because then if we start closing back above the 170 level, I'm just talking 68, but the highs back in the spring were 178. So I think there's a possibility that we get a pause before we take out 178. And to me, this is looking like a little third drive up here towards 168. So that's my target here. I'm not sure I'm going to short it or not. I don't see the stock market being able to accomplish new highs with a huge spike in yield. So as an analyst, I have to ask myself, well, what's the market most concerned about right now? Well, it's not a weak dollar, and it's not a strong dollar, and it's concerned with inflation. No matter, is it demand inflation? Is it supply shocks because of what we have happening with the supply chains? Either way, this is a big concern for the market. This is a headwind, the inflationary numbers, and what's really been a massive part of it has been the crude oil. Okay, so I do want to cover this crude oil. It's doing nothing wrong, and I'm breaking some of my rules, but I'm looking for a high in the crude this week, probably by Wednesday, maybe not today. As you can see, we are diverging, but it's not ideal on the 4-hour because it's over 80, but we are diverging from here. Some of the shorter term time frames, not even the 2, but the 1-hour, we're diverging. We just made this high here. Maybe it's 1, 2, and then a 3. But I think there's a chance for pull back to 80, and then 79, which is the 2-week off number, is going to be right here. The close is 79.5. So that would be one of my primary targets, especially if it happened this week. But I just think there are too many bulls in here, and there's some technical deterioration, plus the oil shares aren't acting as good. I think you have like 90% bulls on the DSI, 86. So the implications for this would be, if we got a pullback in crude, say to $70, would relieve some of what the market's worried about. So the market's been worried about the dollar being too strong. The market in the last few months has been worried about yields and just worried about inflation. So what better than a decline in crude? Although it may happen by, what's probably not a wise decision is, I'm predicting that the Biden administration is getting so much heat about the price of gas, which is cheap if you live in Europe, what we're paying here, that there might be a release of the SPR, the Strategic Petroleum Reserves, that could generate a short term. It's not a solution. It's just to get some of the noise out of the press about people screaming about high gas prices. Well, get used to it. We're screaming about higher food prices and shortages, and I'm glad I'm not becoming a father this week because there's a shortage on diapers. So, this has nothing to do. Remember, everyone went out and bought toilet paper when the pandemic first broke out. That was a demand type of push for higher prices. And now, we wouldn't need strong demand if there's no supply coming in, because they're all sitting outside the ports in Long Beach and Los Angeles and every other port across the world, that we have these supply bottlenecks. I don't know how long it's going to take to resolve it. But anyway, looking for some type of contrarian trade in the crude oil market. So what I do is I probe and protect myself. And if it doesn't work the first time, there's 2 ways to go. Either just have a real loose stop and you're scaling in, and say you sold it here and you'd sell it another buck higher up at 84.30, or I just put a piece on last night risking $1.50 to see if it tolerates it. So stop not elected. If I am stopped out, I'll be looking for other entries up there, because whether or not there's one more high, and this does look like it could be a 2 drive implying one more push up, I'll be looking for another entry. So, that's something, let me coach you. All right. So, um, a lot of times you're right the market, wrong the trade, because, maybe you're early, maybe your stop is too tight. And the trade results in a loss. And just because the trade, your timing was off doesn't mean that you didn't have the big idea right. Okay. So, I have a tendency to not give up and say, oh, I'm through trading crude. It's, I got, people say, oh, I got burned by a market. No, you didn't get burned by a market. You were wrong. Your entry wasn't good. You were just, your timing was early. You were wrong. It wasn't the market. So if I'm wrong, and, I don't have a hard time saying it because I'm wrong all the time, you know, uh, the key is to, not stay wrong and fight it forever so that you take, 20-30% hits in your account based upon one idea. The difference between pros and amateurs are pros know how to lose. Let me say that again. The difference between pros and amateurs are pros know how to lose, so they have money left to be right with. So that's my plan for crude, which, takes me to Canada. Even though, we had Mark Chandler on for the interview last week, and, he said it straight out. Canada is not a petrocurrency. So, if Mark says it, okay, I'm most of the market. I have to believe it because Mark knows fundies a lot better than I do. But, we did tag the 61.8 level. So if you look at a little bigger picture, Canada's been heading down. It's been weak even when the dollar was going up. So I don't know if I have to be in a hurry, but I am starting to watch action here now that we've achieved the 61.8 level. It is possible. What I like about 78.6 retracements, so if you notice on these videos, I not only give you my analysis, but I'm trying to teach you a few things. And what I like about 61.8 is the fib players are getting pretty frustrated. They may have tried it at 38, then they tried it at halfway, and then they tried at 61.8. So by then they're, getting pretty worn out. And I like the 78.6 because, most people do use this 61.8 and 50%, not that much at 38.3. So really the deeper the correction, the weaker the market. But we could trade 78.6 back here. But I'm paying attention to, closes and weekly closes. So the week really did nothing right last week, and the off number for Canada is all the way up at 24.65. So that's around 90 pips from here. So it's on my buy list, but I'm not taking any action here in Canada until until I get something better technically, or my idea in crude oil starts working and we start getting some reversals here. That also, doesn't really bode well short term for Aussie. You look at Aussie and it's been the strength all the way up, even when the dollar was still going up. Before it turned, Aussie was making higher lows rather than the euro making lower lows. And today, euro's up 6 and Aussie's down 15. So, I'd say that a lot of people most likely are going to be looking to buy pullbacks towards 73. This 73 level is going to be important. If we take it out, then you could look at this as maybe a failure. To me, it looks like Aussie's setting up some type of triangle here. Get me out of the way. So we have this right here. This is on the fly TA. Okay. So there's the bottom of your triangle, and here's the top. And this could, this is really going to be one of my preferred shorts once I believe this dollar pullback has terminated, because I think you're going to see it sub 70, maybe 68, 66 cents. So, even though we've had a nice little rally in Aussie, it's come off a big break. I mean, look at this break from, let's call it from 79, 71, that's 800 pips. So if we had a break of 72 and you just tacked on 800 pips, that would give you actually 64. So I think we could see it in the 60s, mid 60s for long-term generational type buys. I don't think we're ever going to see the COVID low again. I don't think we're going to see 54. But, why not just a normal correction and, 68, 66, some type of correction to this huge wave that we had during COVID, similar situation to what, a lot of risk markets did. They're the S&Ps. Okay, so that's my view on Aussie. That right now it's kind of neutral for me. And right now my preferred long is Euro, because Euro was pretty ignored. Here's the weekly. It's not going to take much to give it a weekly buy signal, 115.74. So it's only Monday. So a weekly reversal is already being achieved, but it has to close above it by Friday. So, and here's your, 117 resistance again. Looking at gold, I think I want to wait until I get my interest rate target of, at least 168, and another new high for this rally in the 10-year. And, I've been called a lunatic. All right. Anyone ever hear that? People say, "Oh, Dale, you're not a lunatic. You're a lunatic." And I'll shave later. Anyway, so there is a full moon Wednesday, and you could laugh at me, just like when I talk about change of market directions at the end of a season on the equinoxes and solstices. And when I talk about an eclipse now and then, I know I put on my tinfoil hat and set my pyramid, but there's a full moon the 20th. Okay, that's Wednesday. So maybe turn around Tuesday, stretched into it. And the turns on these lunar events could be, a day either side of it. So, we have this happening. So maybe we'll get the high in crude on this, and maybe gold breaks hard into it Wednesday. And maybe I'll take a look at it down here at 1740. Thought I missed it. And maybe yen gives me a little more upside to pressure precious metals. So but once we have this 168 done, and it looks like it could be done into Wednesday, I'll be looking for some turning points into the full moon. Okay, so Moon River, wider than a mile, I'm crossing you in style, looking for a top. You guys remember Moon River? Anyway, continuing down the board, NASDAQ, I just want to give you some guidelines. I turned less bearish and constructive in NASDAQ down here when I didn't get any follow through to what I thought was going to be a major technical event of breaking this line, and it didn't. And we've stalled right here at 15.2 on the daily. That's the 50-day moving average here. But last week I pointed out the 14.9 area and said 14.9 is pretty important for the market to continue its move to the upside. I think we're going to make new highs into, I don't know when, sooner the better, because I think there'll be a great short after that. But NASDAQ has to hold 14.9 on pullbacks. If that doesn't happen, then maybe it's just a correction of the break that we've had. Here's your daily, right? So we're back at resistance. You know, over 15.2 is going to build the case there. S&P is trading above it. Okay, we, you know, closed above it Friday. So I'd be careful if we had closes back under 44.40. That would imply there's some type of correction coming in the S&Ps, and I would question the recent rally, but it sure looks like a layup to new highs to me, you know, 4,600 or better. And it's something I've been thinking about. I thought I'd put it out there. Everyone who's in the room that's listening to me, if you had huge capital gains right now, you had a great year, you know, you've been long for a year and a half, 2 years since the COVID low, the crash low. And even though the Biden administration isn't getting much through, well, they got some, now they're being stymied. And there was a risk of tax increases. You know, they've, you know, listened to what they say. So, you know, tax the rich and everything. Wouldn't you, just to play it safe, take your capital gains before the end of the year? Just a thought I want to put out there that, you know, could be a factor in December. You know, there's always tax loss selling, but I think a lot of people that have huge gains, yeah, they have some huge gains there. Why risk it being, you know, in 2022, if they don't get higher tax legislation through early in 2022, they could make it, you know, retroactive for the year 2022. So even if they do it in September before the midterms, try and raise taxes on capital gains, etc. So we'll see. I'm definitely looking for new highs. I've given you levels that if they occur, you know, like W.D. Gant said, if you don't learn how to change your mind, you won't have any change left, and you need to write that down too. If you don't learn how to change your mind, you won't have any change left. So we'll see what's happening. Euro's pulling back a little bit here. I'm wrong under 115.50, and we'll see what happens with crude. I'm down about 30 points right now, but this is kind of you know, something I talked about I was going to do this week. Well, it's this week now. So I invite everyone to come and join us in main chat, share your ideas, your work. You could even do it while I'm streaming. Okay. I'm working on an interview for Thursday, maybe Grega Horvat. If you guys have ever heard of Grega, he always used to, when I was on FX Street, he always used to win, you know, the most popular, I think it was sell side or buy side analyst. He's an Elliottician. So I call him the Wizard of Waves. We'll see if I could get Grega for Thursday. And Mike's up at in a couple of hours. Got to catch up with Mike, and I'll check with Mike and see if we're gonna kind of get together and banter tomorrow about what's happening here, and you know, what a nice performance the market put in yesterday and last week. And we talked about it 2 weeks ago. Could this correction have completed? And so far it looks like it has. So you need to be listening to Michael and me, because we're not always right, but we're pretty good. And that's going to be a wrap. Remember, don't just count your euros, count your blessings, and I'll see you tomorrow. Good hunting. Adios.